Greetings, members, one and all of the Salivation Nation. Gold has lost over 1%. Silver has lost over 2% in price, and that's a good thing. Let's explore. That's right. The major precious metals have really taken a beating a bit here today. Now, not by a whole lot, but enough, and for good reason, actually. But before we get into that, let's actually take a look at the numbers here. As of the recording of this video, we see that gold is down $15.80, down over 1%. Silver is down 38 cents, over 2% loss. They are making silver the big loser of the day, where platinum is down only $1, just below that $900 level. Palladium is up $4, and rhodium is up $75. So it is interesting and fascinating. Seems like palladium is immune to any kind of economic news. But what's going on here? Why are the metals moving the way they are today? Well, if you paid attention even just a little bit to the news, we got some really good numbers, economic numbers here. Gold prices, they lose over 1% as better than expected U.S. jobs report lifts stocks and the dollar. That's right. Good news today. The markets are up, and we'll talk a little bit about the Dow Jones, the S&P, and NASDAQ and the like on a general sense later in the video, and the dollar. So silver heads for a weekly decline of nearly 3%. This is from Market Watch, and gold futures settled sharply Friday after the U.S. report on November employment came in better than expected, with gains last month of 266,000 new jobs, marking the biggest monthly gain since January and reaffirming the health of the domestic economy. Now, originally, experts had expected for much less than that, less than last month. But they were blown away by these numbers. Prices for the metal crumbled as hiring in the United States roared back to life in November, said Luckman Otunuga, senior research analyst at FXTM. The data provided support for the U.S. dollar and reduced bets that the Federal Reserve may cut interest rates again soon. So gold remains in the direct firing line, he told Market Watch. Benchmark U.S. stock market indexes also climb, dulling haven demand for gold. And keep in mind, folks, this is good news, and it also should give us even more confidence in accumulating precious metals, gold and silver, because they're doing exactly what they're supposed to do in times like this. They are, it's essentially like an insurance policy. You know, when the premiums go down, if you don't need to use the insurance, well, sometimes you go a long time without an accident or whatever, when the auto insurance, your rates will come down, you know. And same thing with gold and silver. It is on sale, folks, especially silver now. And when the prices fall like this, it's a good time to pick it up if you can afford to do so. February gold was down negative 1.27 on the COMEX, fell $18 at 1.2% to settle at $1,465.10, while March silver fell negative 2.63 cents, gave up 46.3 cents or 2.7%. So this is quite fascinating. The increase in new jobs easily topped the 180,000 Market Watch forecast, helped by the end of the General Motors Auto Works strike, which added roughly 50,000 jobs to the payroll number. The unemployment rate slipped to 3.5% from 3.6% and matched a 50-year low. The strong report isn't enough to push the FOMC into a December rate hike, but it definitely takes any chance of a cut off the table, and that's good, said Chris Gaffney, president of World Markets at TIAA Bank. Rates are definitely on hold for the foreseeable future, and with many of the world's major central banks taking their cues from the Fed, global rates will probably remain where they were or where they are into 2020. In the short term, the jobs data undercuts demand for safe haven gold and helped to provide a jolt to a stocks with the Dow Jones Industrial Average up 1.22%, and the S&P 500 up 0.91%, and the Nasdaq Composite Index up 1%, all moving higher in Friday's dealings. Bullion and other precious metals, however, have been mostly influenced by the latest in trade developments, with remarks from President Donald Trump earlier in the week raising the possibility that a trade resolution to end in a nearly year-long tariff dispute between China and the U.S. could be kicked into next year, maybe as late as even after the elections of next year. I will say that Larry Kudlow, the chief economic advisor, says that we are very close, and he's sort of contradicting that. But you got to think about Donald Trump says things to tweak everyone, not just the media, but also the players involved with this trade negotiation. Keep in mind that with China, we have a couple of different fronts, mainly being what's going on with the condemnation of these prisons and these internment camps for Uyghurs, and also with the protests going on in Hong Kong. On Friday's China State Council began the process of exempting some soybeans and pork imported from the U.S. from punitive tariffs, the state-run Xinhua news agency said, helping to reignite optimism around a partial deal coming to fruition. Gold will continue to get knocked around by the trade headline, that's for sure. We certainly have seen that. So trading has become a function of the fastest trigger in town and wholly driven by trade talk headline risk, wrote Stephen Hines, chief Asia market strategist at AxiTrader, in a daily research note. And, of course, it talks about here other metals, and it gets into the SPDR, exchange traded funds. But nonetheless, that is where it is. Let's take a look at data more closely here. This is the common figure here. This is what's known as the U3 unemployment rate. And as you can see here, since the boom of the 1990s here, at about 4%, we are down below that. We're at a 50-year low for unemployment. The economy is doing well. And by the biggest measure here is employment. That is the largest measure. Now, I remember back during the Obama administration talking about these numbers, and we started to go down. You have to keep in mind that there's other numbers out there that aren't reported in this measure. That's the U6 number. So you can see this line going down here. We're going to talk about that a little bit and explain what's going on here, why this line has been going down pretty consistently, even through the second half of the Obama administration. After the economic, what's known as really the slowest economic recovery in history, has really been kind of taken in overdrive, although you wouldn't really see it by this measure. It has just been continually on a downward spiral here. If you take a look here at this table, this measures what's known as the U6. And so you have all the different measures here, U1 through U6. U6 is the total unemployed. It's the most comprehensive measure of unemployment that is never reported on in the media because its numbers are much higher and scarier. And it accounts for those who are stopped looking for work or who have run out of unemployment benefits. And if you take a look at this number here, we can see that it is obvious that these numbers are higher, but they are going down. They are down further from where they were in the past. From November 2018 to November 2019, it is down 6.5%. Even when you look at it for seasonally adjusted, it is still downward here, 6.9. So that is much better than those numbers were way up back during the Obama administration, when they were 11, 12, sometimes even higher. Now, I'm not looking at this. I don't like to really parse out, these different groups here, but obviously they do range. Look, they're higher from some of the different measures of other employment groups here. But by and large, if you look at every other measure here, everybody is doing better. And in some cases, better than ever measured before, such as Black Americans, and Hispanics. But nonetheless, I think it's something we have to keep in mind here that we are doing well in this economy. Another thing to look at is gross domestic product. We're seeing here from the gross domestic product, looking from the preceding quarter where things are. We can see here that really we didn't see much recovery in this area until the beginning of 2016, where it got above that zero level. And this is kind of where the stagnant has been relatively stagnant through here until the third quarter of 2017 when it got above 3%. We've had several times where it's gone above 3%. And obviously this is going to change and fluctuate. The fourth quarter of last year, it was down just above 1%. But by and large, that is the anomaly. And it has done very well outside of that. And we are solidly up over 2% now. And so this tells me, folks, that these two measures and indicators say that the economy is doing well. And we don't see any really signs of a recession at this point. That does not mean that it won't happen. I believe it will. We are overdue for it. But it has been put off, at least through this year. And probably even into early next year as we see these numbers coming in to us. Now, that does not mean, folks, that does not mean that there aren't people hurting. Somebody had just posted a comment that their sister had just lost their job. And it doesn't take away from any of the pain that people may be feeling economically. There will always be that kind of thing. But overall, statistically, it is doing much better. And the whole goal is that everything will be better for even more people. And hopefully that sister will eventually find a job and be doing better. Wages are up. Unemployment is down. And this leaves it to get us to a point now where even the major news media, CNN here, is even providing some analysis here that Donald Trump now has an obvious path to a second term. And so this is quite telling, almost a dreamlike state that CNN would actually pose a story that admits that the economy is doing well. Says the latest economic numbers, 266,000 jobs created in November, unemployment at a 50-year low, making one thing very clear: President Donald Trump has a path to win a second term next year. It is the economy, stupid, as was once mentioned by James Carville, who was an advisor for the Clinton campaign in 1992, and he was right then, and that holds true today. He was just had articulated it, but it also was what helped Ronald Reagan win re-election in 1984. But it is clear here, the reporting goes on politically, this is good news for Trump. And obviously Trump is about to be impeached. And so with this numbers, but that impeachment actually will be a badge of honor for the president. But that's a whole nother story. The whole moral of this story is that what Trump's policies are, in spite of his character and in spite of how you may feel about him personally, and even in spite of himself, because he will take credit for this all day long and every day. But the reality is he is simply implementing policies that allow for the private sector to flourish. In other words, he's saying we're going to keep our hands off the economy. We're going to lower taxes, give you more of your own money so you can make that money work for you, small business or large business or both. And that's what's happened. It's the free market. It is the free market capitalistic system that we have in this country. Capitalism does more to lift people out of poverty than any other type of institution out there, economic institution. And that is what's happening, folks. And in fact, capitalism is such a successful system, and the free market is as such, that even when socialist type policies are implemented, in spite of that, it can still do well. And I think that's what happened during the last administration. People and people tend to find ways to work around some of these regulations to make things work. The ingenuity of the American people and of those who are working in the free market system will find ways to work around some regulations to try to make things work, even though they may hamper in some way. And I think that's why we had a stagnant recovery after the Great Recession of 2007, 2008. So that is where it is. At the worst case scenario, if you take a look at this particular number here, or the unemployment, let's go back to the total and look at this U3, which is an accurate measure here for all groups here, being where it is and where it is it has been in the past. For those who are critical of supply side economics and this type of theory, conservative outlook and tax cuts and the like, these numbers are not debatable. They are what they are. So they're obviously not hurting anything, and I would argue they're actually stimulating real stimulus with the economy, rather than printing money like it's going out of style to try to stimulate the economy, which is what had happened from 2009 through 2011 through quantitative easing, 3 rounds of quantitative easing. But notwithstanding, where will we be with gold and silver running into next year because of this? And if a trade deal does get signed before the end of the year, a phase 1 trade deal, well, we could see the precious metals take even bigger hits, which, if you need to cash out, so to speak, it's not good news for you. But for those of us who are in the accumulation stage, well, it is very good news. And whenever there's a good economy, whenever the economy is doing well, it's good news for everybody, no matter your political view or what have you. Gold and silver down, the economy up, everybody should be happy, and so there's where things stand. Post your thoughts below. Would like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.